Today, President Trump's 25% tariff on all imported steel and aluminum is in effect. He did, however, reverse course on a 50% tariff on Canada.
As you know, there's a very strong man in Canada who said he was going to charge a surcharge or a tariff on electricity coming into our country. He has called and he said he's not going to do that.
In a world of shifting economies and political power plays, Canada finds itself at a crossroads. A storm is brewing on the economic horizon, and its name? Tariffs. With the return of Donald Trump to the White House, new trade policies and economic measures could send shockwaves through Canada's industries. But the real question remains, can Canada withstand the impact of Trump's tariffs? The possibility of Donald Trump returning to the White House has sent ripples of concern across the global economy, particularly for Canada, the United States' largest trading partner. If Trump enacts another wave of aggressive tariffs, as he did during his first term, the impact on Canada's economy could be severe. In 2018, tariffs on steel and aluminum led to job losses, supply chain disruptions, and increased costs for businesses. A renewed trade war could be even more damaging, affecting industries beyond manufacturing, such as agriculture, energy, and automotive production. The Canadian economy is deeply integrated with the U.S., with over 75% of exports heading south. Any disruptions in trade could create a domino effect, leading to increased inflation, business closures, and financial instability for millions of Canadians. While the government has taken steps to diversify trade partnerships, the reality is that the U.S. remains Canada's most crucial economic ally. If Trump's policies once again prioritize America first, Canada must brace for a challenging economic battle. Industries that were previously targeted by Trump's tariffs, such as steel, aluminum, and dairy, could once again bear the brunt of the economic fallout. The automotive sector, which employs hundreds of thousands of Canadians, is particularly vulnerable, as new tariffs could make vehicle production more expensive and less competitive in the U.S. market. Similarly, Canada's agricultural sector, especially dairy and grain exports, may face new trade barriers, making it harder for farmers to sell their products in the U.S. The energy sector is also at risk, as Trump has previously shown a willingness to disrupt cross-border oil trade. With Canada's oil exports heavily dependent on U.S. buyers, any additional tariffs or restrictions could destabilize an already volatile industry. These industries form the backbone of Canada's economy, and their weakening could have far-reaching consequences, including job losses, reduced consumer spending, and a slowdown in overall economic growth. To mitigate the potential damage, Canada must take proactive measures to strengthen its economy before any tariffs come into effect. One strategy is to continue diversifying trade relationships, focusing on strengthening partnerships with Europe, Asia, and Latin America. Agreements such as the Comprehensive Economic and Trade Agreement, CETA, with the European Union, and the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP, offer opportunities to expand Canadian exports beyond the U.S. Additionally, the government must invest in domestic industries, providing incentives for local manufacturing and innovation to reduce reliance on U.S. supply chains. Policies such as tax relief, subsidies for affected industries, and increased funding for research and development could help businesses remain competitive in a changing economic landscape. However, these solutions require long-term planning and immediate action to minimize the impact of potential trade restrictions. Despite the looming threat, Canada is not without leverage in this economic showdown. The U.S. also relies on Canadian resources, including vital raw materials and energy exports, making a completely one-sided trade war difficult to sustain. Additionally, the Canadian government has historically responded with retaliatory tariffs when necessary, pressuring the U.S. to reconsider aggressive trade policies. Diplomatic efforts will also play a key role in navigating the uncertain relationship with a potential Trump administration. While Canada's economy is resilient, its ability to withstand another round of tariffs depends on strategic decision-making, government intervention, and economic adaptability. The question remains, will Canada be able to weather the storm and emerge stronger, or will it struggle under the weight of protectionist policies? The answer will shape the future of Canada's economic landscape for years to come. If Trump's tariffs materialize, the immediate consequence will be a rise in production costs for Canadian businesses that rely on U.S. trade. Higher tariffs mean Canadian exporters will have to either absorb the additional costs, cutting into profits, or pass them on to consumers, leading to inflation. This could make Canadian goods less competitive in both U.S. and international markets. For industries like manufacturing and energy, which already face challenges such as labor shortages and global supply chain disruptions, additional trade restrictions could be devastating. Small and medium-sized enterprises, SMEs, which form the backbone of Canada's economy, may be hit the hardest as they have fewer resources to absorb financial shocks. Many Canadian businesses remember the impact of the 2018 trade war, when retaliatory tariffs on U.S. products led to price increases for everyday goods, from groceries to construction materials. If history repeats itself, the average Canadian consumer will also bear the burden of higher costs, making everything from food to automobiles more expensive. Beyond immediate economic strain, a prolonged trade conflict with the U.S. could shake investor confidence in Canada's market. If businesses anticipate long-term uncertainty in trade relations, they may hold back on investments, leading to slower job creation and weaker economic growth. Canada has traditionally been seen as a stable and attractive destination for foreign investors due to its strong trade ties with the U.S. However, a renewed trade war could change that perception, driving investors to seek opportunities in markets with fewer political and economic risks. Moreover, if Trump follows through on threats to renegotiate or even withdraw from the U.S.-Mexico-Canada Agreement, USMCA, Canada's trade landscape could face unprecedented disruption. The USMCA, which replaced NAFTA, was meant to provide stability for North American trade. If Trump challenges its terms, businesses that rely on cross-border trade could face new regulatory hurdles, further complicating an already fragile situation. However, Canada is not without options. One of the most crucial steps the country can take is to strengthen its domestic economy to reduce dependency on the U.S. market. Encouraging local production, investing in technological advancements, and expanding infrastructure to support homegrown industries will be vital. Additionally, Canada must continue to build alliances with other global economic players, such as the European Union, China, and emerging markets in Africa and Latin America. By securing stronger trade agreements and diversifying exports, Canada can create a safety net to cushion the blow from any U.S.-imposed restrictions. Another approach is to develop strategic partnerships within North America itself, collaborating with U.S. states that benefit from Canadian trade. Many American states, particularly those with manufacturing hubs, rely on Canadian imports. Leveraging these relationships could help Canada counteract some of the pressure from federal-level trade policies. Ultimately, Canada's ability to withstand a renewed trade war with the U.S. will depend on how quickly it adapts to the changing economic landscape. The government, businesses, and consumers must prepare for potential economic turbulence by seeking alternative trade opportunities and reinforcing domestic industries. While Trump's tariffs could present a significant challenge, they also serve as a wake-up call for Canada to lessen its over-reliance on the U.S. economy. In the coming years, Canada's resilience and strategic planning will be put to the test. Whether it emerges stronger or struggles under the weight of protectionism will depend on the choices made today. The battle is not just about trade, it is about Canada's long-term economic sovereignty in an increasingly uncertain world. Join us as we unravel the complexities of this economic showdown, uncover the industries at risk, and explore how Canada can fight back against one of its greatest trade challenges in history. This is the looming economic fallout. Can Canada survive Trump's tariffs? The trade war returns. In 2018, Donald Trump initiated a fierce trade war, imposing tariffs on steel, aluminum, and a range of other goods. Canada, as America's largest trading partner, felt the heat. The impact was immediate. Higher costs for manufacturers, supply chain disruptions, and uncertainty for investors. Now, with Trump eyeing a return to power, many fear that a second wave of aggressive tariffs could be even worse. But why? If Trump follows through on his America First policies, we could see increased tariffs on Canadian exports, strained relations between Ottawa and Washington, a potential renegotiation of the USMCA trade agreement. For Canada, this is not just a political game. it's an economic battleground. The industries at risk, some of Canada's most vital industries, are in the crosshairs. Let's break it down. 1. Steel and aluminum. In 2018, Trump's 25% tariff on steel and 10% on aluminum sent shockwaves through Canada's industrial sector. Jobs were lost, prices soared. Could history repeat itself? 2. Automotive industry. Canadian car manufacturers rely heavily on U.S. exports. If Trump imposes new tariffs, vehicle production costs could skyrocket, leading to layoffs and plant closures. 3. Agriculture and dairy. Trump has repeatedly targeted Canada's dairy industry, arguing that supply management policies give Canadian farmers an unfair advantage. A new wave of tariffs could make it harder for Canadian farmers to sell their products south of the border. 4. Energy sector. Canada's oil and gas industry is deeply connected to the U.S. market. Tariffs or restrictions on Canadian crude oil exports could destabilize an already volatile sector. These industries are Canada's economic backbone. If they crumble, so does the economy, the economic fallout. If Trump's tariffs hit hard, the ripple effects could be devastating. The Canadian dollar could weaken, inflation could rise, and businesses might face closures or downsizing. The stock market could see major losses, especially in sectors reliant on U.S. trade. But it's not just about numbers. It's about people, workers, families, small business owners. A trade war isn't just fought in boardrooms. It's fought in the homes of everyday Canadians trying to make ends meet. Can Canada survive another round of economic turbulence? How Canada can fight back? Despite the looming threat, Canada is not without defenses. Here's how the nation can stand its ground. 1. Diversifying trade partners. Canada has already strengthened ties with Europe and Asia through agreements like CETA and the CPTP. Expanding these partnerships could reduce reliance on the U.S. market. 2. Strengthening domestic manufacturing. Investing in homegrown industries can make Canada more self-sufficient and less vulnerable to U.S. trade policies. 3. Strategic government policies. The Canadian government must prepare for worst-case scenarios, whether through subsidies, tax relief for affected industries, or retaliatory tariffs. 4. Diplomatic engagement. Despite Trump's aggressive stance, diplomacy remains key. Canada must navigate negotiations carefully, balancing firm resistance with strategic cooperation. The road ahead is tough, but Canada has options. The economic storm is approaching. Whether Canada weathers it or falls victim to it depends on preparation, resilience, and smart decision-making. Trump's tariffs could deal a heavy blow, but Canada has the tools to fight back. The key question remains, will Canada seize the moment and emerge stronger? Or will it struggle to keep up in an increasingly protectionist world? Only time will tell. But one thing is certain, Canada's future is being written right now. This has been the looming economic fallout. Can Canada survive Trump's tariffs? Stay informed, stay prepared, and most importantly, stay resilient.